Hey everyone, this is Joshua Martinez from Market Traders Institute. So you want to be a Forex trader. This is video number 10 of our video series. Our last video, number 9, we drew on the whiteboard in regards to support becoming resistance, resistance becoming support, and how you want to view it or how you want to apply it in your everyday trading. In this video, we're going to jump into the live market, and I'm going to show you firsthand how we analyze the market, and on a daily basis, we take this into consideration. So let's go ahead and do it. Hey everyone. Okay, so in front of you is a Great British Pound US dollar. And what we're going to do is I'm going to show you in this downtrend how past support becomes future resistance. Remember, past support is a fancy word for previous low. Future resistance is a fancy word for previous high. Future high. Make sure you watch video 9. We did a nice discussion on that whiteboard back there. So I'll shut this off. But let's go ahead and see this example. I'm going to show you on a 1-hour time frame, and then I'll show you on a larger time frame. Support and resistance always works best on a 1-hour time frame or larger. Ideally, you use support and resistance on your larger time frames to help you find direction. But we can absolutely use them on our 1-hour time frames, which we do to help us enter into the market. And we couple them with like counter trend line breaks. They're really, really wonderful. So here we go. This market is in a downtrend. The market pushed bearish. And so if we take a look at your screen, you can clearly see that, hey, the market extended towards the south. This low is known as past support, where you have these previous lows. And what we're going to say is, because this market moves in waves and it doesn't move in straight lines, because it moves in waves, we're going to expect that this market is going to retrace towards that level. And now that it touched it, see how it touched it right here? What we're going to do is we're going to be looking for reasons to sell this market. Now, sometimes it will pop up just a little bit above it, like you can see here, the little long wick towards the north. And sometimes it will retest it a few times, but that's quite all right. We're going to look to sell. Now, notice how this market completely fell bearish. It fell about like 122 pips. That's like $1,000 with a standard position. Now, we're going to continue this process over and over and over again, and we're going to be looking to sell areas of support become resistance, and you're going to notice that the market's going to gravitate towards these previous lows becoming highs. Now, just look how this market keeps falling every single time it touches one of these lows becoming a high. Look how you've had literally 1, 2, 3, 4 solid short trades, and look how it just touches these levels numerous of times and then makes the decisions, and then it just falls. We're going to keep playing this game bearish towards the south until the market completely reverses. Now, sometimes traders ask the question, well, how many times will it reverse bearish? How many times will it hold? Well, that's always a good question. Sometimes it will take, you have months and the market just maintains the trend. Other times it will just be 3 or 4 times, but you literally are just going to keep tracking this process over and over and over again and until you get a complete reversal. Now, a reversal is going to be when or if the market forms, starts making higher highs and higher lows above your support and resistance levels. But notice how, for the most part, you're looking pretty solid. In this occasion over here, you can see the market did break above it just a little bit, but ran towards the previous support become resistance. So this one held twice. And then this one over here, you had support become resistance. That held bearish as well. So sometimes the market will break them and then run to the previous one. So you can see here, broke it, ran to the previous one, held. Broke this one, ran to the previous one, held. And you just play this game, support and resistance. The past lows will give you a strong idea of where future highs. So, for example, this market just extended bearish. So our brain is going to say, well, wait for it to come up. Once it touches this level, we're going to think sell. And look how the market came near the level, and look how the market fell. Now, in this scenario, we never touched it. But you can kind of get an idea of saying, hey, if we're already up bullish and we're within only a few pips away and a fundamental announcement's coming out, it's probably a good idea that the market's probably going to fall. Or, odds say that when the market is when you get to this level and you say, hey, we're right there, we're right at that level where the market U-turns, support, support, resistance, resistance, it's probably a smart idea to take this bear signal, which is an evening star, serious, and look how the market fell. And so it's just a wonderful game, and let's see how far this market will go. Would not surprise me if the market retests this level a few times. Here we go. The market broke this level. Support become resistance. That's a good sign of, hey, the bulls may be reversing soon. And so there's level of support, held a little bit, and now we're running up here. Let's see. Look how we touched it. Look how we touched that level. Now watch. Coupled with an up sub ABCD swing, easy short. For those of you who know about your Fibonacci's, this is like a no-brainer short trade. This thing's going down. And it's just amazing. It's just such amazing tool to utilize when you're looking for U-turns. And same thing. Market is exhausted bullish, going to go down. It's like straightforward. So hopefully you kind of see in the way. I know it's not like exactly, hey, where do I place my stop? Where do I place my limit? We're not there yet. This is not about entering into the market. This is about finding your U-turns. We talked about using counter trend line breaks for entries. We can do a presentation where we put it all together. That would be quite nice. But we use it even on the larger time frames. Here's the Great British Pound New Zealand dollar. This is the latest big trading opportunity that we're looking at because of support and resistance. But look at this red line where you have this market hitting resistance, 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 resistance. Now that acts as support. So what once pushed the market down, four scenarios are going to help push the market up. So we're looking at about 1,000 to 2,000 pips of upward movement on the Pound New Zealand. And, Pound Aussie, this is perfect. You can clearly see here, this was such a wonderful trend. We took this to the bank, and this was just perfect for us. We traded this for a handful of years now, but take a look at your screen. Resistance becoming support, market rallies. Market pushes up, resistance becoming support, market rallies. Market pushes up, and now here we are touching the support again. And it's just one of those things where it's like, hey, we've been here before. Past resistance becomes future support. Past resistance becomes future support. Let's look to buy this market again because of this technique. If you don't see the trend, you can see it after I outline it for you. Higher highs, higher lows, higher highs, higher lows, higher highs, testing it, expecting the market to go up. So it's a great area and a great tool to use for U-turns. Hopefully you learned a whole lot. Let me know in the comments below if you want me to put together like a video of putting it all together. Hey, this is Joshua Martinez from Market Traders Institute. You can always find me on Facebook, www.facebook.com/FXPathfinder. Find me on Twitter, Blab, on social media. I'll be there. This is Joshua Martinez.